Welcome back to 7-Minute Options. Today I'm going to take a look at a position I've had open for the last 3 weeks in ARKK and why I think today is a good day to close it. I don't want to hold it any longer. So this is the position we're talking about, ARKK. Back 21 days ago on May 7th, I sold a naked put at the 92 strike and I collected $205 in credit. Today I can buy this back for $47 and walk away with a nice $158 of profit. And let's take a look at the chart and figure out how this trade came to be and why I think today's a good day to sell it. So this line represents the day that we bought it, so back on May 7th. And as you can see, in the 4 days prior to us buying it, this thing was selling off, right? Sell off, sell off, sell off, sell off. And as it's selling off, whenever an underlying is selling off, the volatility tends to increase and spike up. So on this day here, it was now like 45-ish days to expiration. The IVR was a very juicy 60. So that tells me that the options are selling for a nice premium. There's a lot of money to collect there. And so we did. We sold it at the time. I think it was, let's see, 42 days to expiration, which is right around the range I like to sell it, right around the 40 to 45 range. And then basically after that, it continued the sell-off. Now here, if you look at the RSI was just above 30. Remember, if the RSI falls below 30, that's usually an indication that a security is oversold. And sometimes people expect once the RSI is in the oversold area, people expect it to rebound. We got lucky, it did. But if you look at it here, it continued to sell off. So actually, I was losing money on this for the first 3 or 4 days. And you can see the IV continued to increase. So we were actually down 40, 50, 60 bucks down here about a week after we sold it here on May 13th. But then it started to turn. And now over the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 sessions, it had 9 green days. So it went up 9 times out of the last 11 sessions. And when an underlying increases for that long of a time, that consistently, the volatility tends to contract. And so this helps us 2 ways, right? When we sell a put or a call for that matter, whenever the IV is contracting, that helps us. And when it's moving away from our short strike, it's helping us as well. So this helped us 2 ways. And yeah, I mean, the volatility contracted, and here we are halfway through this cycle, and there's only, I think, $47 left of extrinsic value, right? So why do I feel like this is a good day to sell it? Well, for one, the volatility is almost at zero here, right? I mean, yes, it can go lower, but in reality, it's already starting to pick up a little bit. It kind of bottomed out. I don't really expect it to contract much further. That's one. You can see the Bollinger Bands are also contracting, which is also indicative of the fact that the volatility is contracting. Typically, you see the Bollinger Bands get wide or fat when the volatility is high, and they get very narrow when the volatility is low, and that's what you're seeing here. And the other reason is, like, why hold it, right? I have 21 days to go. I can only squeeze another $47 out of it. That would leave me with a theta of 2, right? Like really $2 a day. And that's a lot of risk. What if this thing turns around? Because if this thing starts to turning around on me, right? If this thing starts selling and we have 2 or 3 days of a sell-off, all of a sudden volatility picks up, and all of a sudden now my options are priced a lot higher, and I can easily erase 2 or 3 days worth of gains. So if the stock moves lower, I'm going to be fighting that, and the pricing of the options is going to get more expensive. So that's a risk I don't want to take. Most of the money is already gone. Like, we already squeezed out 3/4 of the extrinsic value that was in this option. The other question is, I mean, 21 days is a good day to roll it. Why don't I want to roll it? Well, for the same reason. Volatility is low, which means right now the volatility in the option chain, including the next monthly expiration in July, is also in the same range, like 44 this month, 43 in the next month. So I'm going to face the same problem. If I sell one right now, I'm not going to get a lot of premium for it. Let's say if I want to roll this right now, if I roll it into July, I get 90 bucks. Not bad, but not particularly great considering I got 205 bucks for it just 20 days ago. And the other reason is basically, I think the best thing for me to do right now is close this position, keep an eye on it. If this thing has another sell-off where it goes into a 3 or 4 day period of decreases, then volatility is going to pick up again, and that will be another good opportunity to sell a put. This is not a terribly great time to sell another naked put, so I'm just going to close this position out today and see what happens. One other option I could do, so I could close this out in the June expiration, right, and then go into July and sell the exact same put, or well, they don't have the same put, so let's sell a similar one, right? But let's roll it up. So if I want to reset my probabilities to the 20 delta range, I could pick up $195, but that brings me up to the 100 level. If I look at the graph, the 100 level is right there. Not terribly good. I mean, if we have 3 or 4 days of sell-offs, I can easily pierce that 100 level again. And so I'm going to wait a little bit before the volatility picks up before I open another position. So I'm going to sell this today. I'm going to cancel this one. I'm going to close this position today. It has a good run. We made 3/4 on it. And that's going to be it. Good to cancel. And let's see if I can close this. If not, you can see here. Yeah, so I'm going to wait to see if this closes today. If not, I might have to pay a little bit more for it. Right now it's trading for about 50. Let's see the market on this. The market on this option is 45 to 50, so it's 5 cents wide. Not a lot of people on it, so I might have to pay a few extra cents. I offered 47, so let's see if yeah, it's working. I might have to replace this one and go up to like let's try 48, and I'll say good to cancel, and I'm gonna hope that this closes today. If not, I'll keep an eye on it. I might have to roll it up to 49. Not happy about it, but still well within the my comfort zone. So I'm very happy with this trade. It worked out really well, and I'm going to be looking out for this to drop in price, increase in volatility before I sell another option against it. All right, thanks guys.